and you're ready to go.
All right.
There. Hey, big round of applause for our panel, ladies and gentlemen. Let's hear it for them.
All right.
Yes, thank you.
So talking about the panel, we already have a snapshot of their profiles and experience. But the composition to me is the most important. You have a really representing the traditional finance and to the new finance part of the investor. Kevin Ng, no stranger to many of you, has invested and he had his footprint in so many IPOs. And out on the floor, there are a couple other special products and offerings he's already invested in. So talking about investors, there is no other OG than Kevin Ng, and we're going to specifically talk about his latest project and doing RWA tokenizing something real, some land. And I'll give you some hint later on what it is. It tastes really good. And then, of course, we have Justin representing company RD, one of the 3 original admitted operator under the sandbox in Hong Kong. So talking about someone who knows the regulations, knows what it's like to operate under the regulated environment. This is someone you want to pick the brain and then get all the insights about stablecoins and how it transitioned into also RWA and tokenization. Of course, all the way from Bali, Matt Cook, old friend, who also ventured all the way from impact creating things in tokenizing for good. And I look forward to catching up with Matt and on especially your off-chain community, where 80 different chapters around the world. And currently you're the co-founder of this EVM designed to drive real utility in the emerging market. I'm going to ask him what he defined as emerging market. That's a big term, right? So, of course, last but not least, S. Mew Pao, someone who in day job is focusing on regulation, helping companies to get compliance done, but at the same time, she is a really sharp analyst. She's the first on the sell side that actually covered digital assets and actually advise and has been advising some of the largest capital funds in their real digital assets tokenization allocation. So if you want to learn a little bit about investing and what is in the mind of analysts, this is it. So this is the panel. What we have is focusing on 3 different aspects of the RWA. First is from a regulation. The panel is really about trust, building trust. Well, to many, regulation is really the foundations for trust in the public eyes, but however, it can be also a hindrance, and also you got to find the balance on that. So we're going to talk a little bit about that. Second, one of the biggest RWA is we always talked about back in the days, even NFT boom and all that stuff, is really the IP, intellectual property. If we can do the tokenization, RWA with IP, that is the holy grail. I mean, think about how many tokenizations and projects you can come out of just any kind of IP. And I definitely will pick Kevin's brain on about the old days of what it means to be the IP and having a monopolize at one point that he has 90% control of the 90% of the cyber cafes in Southeast Asia, in Malaysia and other places. So that's someone who knows about IP rights. So, and then the last, we're gonna go back and maybe talk to Justin a lot more about stablecoins and the next RWA frontier. So that's the kind of, hopefully you will stay for all 3 different segments. So with that, I'm gonna start with the first open questions and I'm gonna ask me first and work our way down. In what ways do current and emerging regulation truly build trust for investors or users in RWA, given the context of what I just mentioned? Regulation, is that your friend or foe?
Sure, thanks for the question, and it's a pleasure to be here today. So just to give everyone the way I approach it, so I look at it from a capital markets perspective as a former sell-side analyst. So I'm going to talk about regulations, but I think that will be the forte of my fellow panelists. I want to focus on how attractive it is for regulations to make RWA from a collectible to a investable asset, right? So I think ultimately what regulation would do is that I see it more as an empowering agent rather than a red tape. And the reason I say that, if you look at it from more of an investment perspective, so better regulation is going to lead to tighter spreads. So tighter spreads would mean having a lower discount rate. So a lower discount rate, for example, would be using stablecoins, regulated stablecoins for settlement. So that's going to make it easier for investors to go in. And I think just to more broadly speaking, so we can talk about currently, I think with crypto only being if you round it up, it will be 4 trillion assets. 4 trillion billion. So what we really need would be for institutional capital to come in, and for that to play out, so we really do need the big asset managers to come in, and the prerequisite for that would be have regulations as your friend.
Great. Matt, I'm going to add on a little context for the audience. Of course, your chain operates globally, but you're physically in Bali. So for somewhere that is not known for regulations, how do you see regulation actually within your community and interact with your community folks?
Thanks, Joe. Yeah, so I would say that Mandala Chain is, for us in particular, we're based in Bali, some of the team, but we're also building use cases in the greater Indonesia area. And when you say global, I think most permissionless public networks are global, and we have intentions to continue to work with other regions. But what we're focused on in Indonesia is working with the local government and enterprise sector to help them build side chains off of Mandala that are all jurisdictional, GDPR compliant. And so one of our foundational use cases is, and I think that there's a lot of examples of this right now, is the trust, is the compliance. So KYC and things like this with digital identities, which is one of the things that we're really kind of pushing for as far as adoption, both in Indonesia, but if you're another country or another nation state and you want to create your own digital infrastructure, Mandala Chain is an example of an ecosystem that can help you do that, where you actually have your own private chains or public chains that connect to us, and you can use those for different, let's say, a suite of products: identity, data storage, real-world asset tokenization, all within your jurisdiction, so that you can claim that as being compliant. And then through our main permissionless network, that opens up interoperability, which is also EVM compatible. And that's the main thing. If you have these private chains in different regions of the world, they need to be able to interoperate, and the liquidity needs to be able to move. So through the public permissionless world, that's enabled. And so I hope that answers your question.
Yeah, definitely. On top of it, do you see the trust factors different from regions and from where you're at to other places?
100%. I would say when you say emerging markets, I think it's all about education right now. So right now as we speak, we have the Polkadot Blockchain Academy and the Mandala Blockchain Academy in a deep dive 3-week program in Nusa Dua, which is in Bali, where today we had 60 different government officials come and mingle with all the new students that have flown around the world that are building on Polkadot. But actually, this is definitely a trust factor where the government officials need to be educated. We have boot camps that we're starting to do with them so that they can understand, the world of blockchain. Let's just say, take it away from the typical crypto, where everybody's scared about, rug pulls and scams. It's all about building trust, like you said, through identity layers and private networks that they can adopt. So just showing them what's possible is important.
Great.
Yeah.
Good to get it from a user perspective and community. How about Justin's, from more of a regulated already entity? What do you see regulation as a trust foundation, or do you see as a hindrance in some way?
Yeah, I think, I think a couple of cycles ago within crypto, we would have seen that mass adoption would come from more meme coins, more degens, more people just looking for financial upside from high beta. But I think going forwards now, whether it's ETFs now being able to have Bitcoin and Ethereum, whether that's private chains on banks, these are things that require customer protection and requires firm regulation around these kind of things, right? Before that's what we think the next mass and billion adoption will actually come from. With that in mind, I think there are actually like a lot of practical use cases that you actually see from regulation, specifically in Hong Kong as well. So, for example, the fact that stablecoin has actually come into legislation and come into law, this will affect very practical things like accounting, right? A very practical use case I can share is, for example, for unregulated stablecoins in Hong Kong, if you account it on a balance sheet, you actually take a huge haircut. It could be as much as 100%. What this actually means is that if you hold Tether as a bank, you can't actually take that as a risk-free asset, which means that actually impacts your RWA calculation, right? So this is very practical in the sense that if we want mass adoption, which I believe most retail customers, if you haven't already decided to have a cold wallet or have your own wallet that you operate and buying Bitcoin, will likely start to buy it through traditional means, right? Whether that's a futu here, whether that's an interactive broker, whether that's through your private bank in HSBC. For that to actually happen, we need to have proper regulation that banks can understand and can rely on, because now they're opening up to trillions of dollars of assets and not just an exchange who can basically trade a couple 100,000, right? So these are kind of really practical things that are needed. Now that the regulation is in place, stablecoin that is licensed in Hong Kong can actually be seen as an asset that can be on a balance sheet that doesn't need to be 100% haircut, which means that a bank can actually use that and hold it without it actually impacting how they do loans, how they do risk ratios, right? So these are kind of practical things that we don't talk a lot about with what regulation is actually needed for a bank to actually operate and use these things. So these things are really important going forward.
Okay, for Kevin, you've been around the block and actually played with different IPs and actual real assets for a number of times. On top of answering the questions, what's your view on regulation? Have you in the past actually have any run-in with regulations and regulators? They actually create it and actually go after you saying on the compliance or anything you have done?
So this is a good question. When crypto has been around for the last 10 odd years, we entered the market in 2016. Literally, there were no regulations in the whole entire industry. So regulators don't come after you unless you really scam people. And majority of crypto projects, some of them are scamming, some of them they are good projects run by stupid founders or smart founders running dumb projects, So a lot of the projects are doomed to fail. And we invested more than 330 over projects globally. Around 80% of them are literally gone today, right? What is left back? Some of them are pretty successful. Some of them are just hanging there and hoping for a return. But that's just how crypto market is. But regulations are coming in today. You cannot simply just launch a project, rock and run, right? The days are numbered, or what we like to say, the Wild West is coming to an end, right? But thanks to Trump, Wild West restarted back again.
So that's a whole different topics about trust when you bring in Trumps and everything. But however, that said, I want to start the next question with you on IP. So we're taking a deep dive. We talk about trust building, maybe a little bit about regulations in the eyes of various operator. You have the regulator entity, and then you have the community users, and also an observer and analyst. But for you are actually the early pioneers in actually leveraging on IP. So tell us, earlier I mentioned about the control of 90% cyber cafe. It has to do with IP. Tell us the story. What did you do with the IP?
So literally back in the 90s, when internet cafes or cyber cafes was the main thing for the internet. Literally nobody goes to cyber cafe to send emails. Maybe 3 or 5% of people does that on the cyber cafe. 95% or 98% goes to cyber cafe to play games. And at that time, LAN games is the main thing. So I saw there was an opportunity that at the back of every VCD or DVD or Laserdisc back then, they have a fine print. It's for home and private use only, which means that even if you buy the original copies, you cannot run a commercial business with it. So I can't buy Terminator movie and then I charge all of you a ticket to watch the Terminator movie, even if the DVD is legit. It's only for my home and private use. So I saw that, and with my limited law knowledge back in university, the Berne Convention, Geneva Berne Convention tells us that if you own a commercial rights to certain things, you control the market. So I went to WAF, I went to Take-Two, I went to EA, Electronic Arts, and I bought off the rights to all the most popular games for cybercafes. And I told every single cybercafe that if you don't join my franchise, you don't use my game.
So that's really on IP rights.
Yes,
It's
correct.
the backbone of everything. That's the commercial rights. Everything is hinged on IP rights. So with that, I want to move to Justin's and ask, what do you see as the IP potential of IP rights trading, or on your vantage point, what does that to do with your business when it comes to IP rights and RWA?
Yeah, I mean, I'm not sure I'm in the best position to comment. Maybe Mandala Chain can share a little bit more on things like permission and IP rights. From my perspective, maybe as a stablecoin issuer or potential stablecoin issuer, the key is still KYC, know who's behind it, whether that's on the Genius Act, whether that's what we see in MiCA compliance in Europe or in Hong Kong. I think it's very difficult going forwards to imagine the old Wild West days where everything's completely anonymous, where money's running completely anonymous, whether that's travel rule being already set in these places, whether that's direct issuance, having to know who that customer is, where your source of wealth is, a little bit like opening a bank account, I think is the direction that we're going towards. I think it's interesting to see how chains like Mandala are working with local banks and governments to have a hybrid between a permissioned and a permissionless chain. I think these are kind of things that will slowly evolve. And those are things that are important when it does come towards like IP, whether that's things with intellectual property ownership, whether that's with smart contracts with legal, with escrow, with things like rental payments, with things like owning RWAs. Like these are all kind of things which are important on the IP side, which can be controlled on the chain. So it'll be interesting to see what chains developed. And as a stablecoin issuer, where we play is really, if we imagine a smart contract a little bit like an AI agent, which is actually paying out the money, like it'll be interesting to see where, they're not going to be the ones who actually go and open a bank account. It will be working with digital money. Now, digital money on chain will essentially be stable coins. And so we're very keen to see how these kind of different smart contracts work with IP and work with releases of funds. And so, chains like Mandala would be interesting to see how they develop this space.
So
You want to respond?
Maybe I can add a little bit about IP. I think IP on the blockchain is already happening. If we look at NFTs like Pudgy Penguins, Bored Ape Yacht Club, right? Mutant Apes, these are all IPs on the blockchain, and these are what is, I would call them the first beginning of IPs on blockchain. You can take traditional IPs. I feel that in the future, the crypto market, the blockchain market for IPs around the whole world will totally change. Imagine that you are able to own a character in the Marvel universe or the Disney world itself. And these are what people like Bored Ape Yacht Club, Pudgy Penguins, they're trying to move into this space.
So excellent point to segue into owning the individual IP to tokenizing something that's big, like it's a Marvel character. Not one studio or not one single individual can own it. But what if they tokenize that whole revenues? And so this is where Matt and then Esme can talk about that.
Yeah, I just want to double down on what Calvin was saying, is that, obviously Pudgy Penguins and let's say Pokemon now is the latest one that everybody's talking about. These are examples of how tokenization and blockchain can be a perfect use case for something. But if we continue to abstract away all of the Web3 stuff, right, and continue to make it a user experience that is seamless, where you don't even know you're using a wallet or anything like this, then mass adoption can happen. And I think it is going to transform the way that we interact with IP. a couple examples of what we're doing right now with IP. I just had a conversation with a project or a business owner in Indonesia, in Jakarta yesterday, and they have a publishing house or a marketplace for authors that create novels and other types of works and they aim to turn them into movies. And so this is a perfect example of how tokenization can work with these IP creators to help invest or be a part of products, IP that they would love to see go to, say, the movies or be produced into an actual screenplay or something like that. So it does level the playing field, opens up access, and then more people can get involved. And then also the creators benefit from it. Another example is the football industry of Indonesia right now. We are working within the football, and I don't know how many of you guys know about the diehardness of the football fans of Indonesia. One fun fact is that a lot of these Spanish teams...
Nobody knows because they are not in the World Cup.
Yeah, exactly, yeah. But a lot of these overseas Premier League teams, 30% of some of their fan base and their customer base from advertising and revenue streams is coming from Indonesia alone. And Indonesia has a football league of their own, and they are just extremely diehard fans. So we're now working with certain players in the industry called with the Center for Football Innovation to help tokenize certain IP rights. So let's say potential games that could come from this, where you have things like, there's another Polkadot ecosystem game called FIFA Rivals. So perhaps a version of FIFA Rivals for Indonesia, where you have Indonesian football leagues, Indonesian players, all, let's say, tokenized IP, where the value exchange is quite seamless and scalable. So this is something that, is another example of gaming, IP, and just tokenization in general. So I think that there's a lot of potential, and there's a million use cases, and it's a great use case.
Great, thank you, Matt. For Esme, you have seen the term RWA for a long time. Why the resurgence, and from an analyst point of view, what do you think the future will be, and specific to IP, if you can open up beyond the NFT, beyond the characters, and what are the new frontier for RWA?
Just tying back to the idea of tokenizing IP and also to Matt's point as well. So I do want to give a real-world example. And you will see that if you go back to Web 2, so what you see is recently, there's been a resurgence, if you will, related to just private credit, related to just packaging bonds. And the underlying asset would be, it's called BOE bonds. So it's tokenizing songs and also the royalties. So that has been a massive hit in Wall Street, and that's come off as really surprising. So my idea, if we step back, is that whenever there needs to be investor demand, right? And I think for Web3, when you want to look at investor demand, the easiest place to look for is what's happening right now in the Main Street and also in Wall Street. So given that there's already been a case being built up for BOE bonds, that's tokenizing IP assets and also music. So that's fancy, but that's nothing like, like the GameFi and also anything that will come into fruition later on. So I think that's an immediate test case related to tokenizing IPs, and I think that answers your question relating to what's driving the resurgence. And then the second topic that I'd like to discuss would be around what needs to play out in order for tokenization to have place. So apart from just regulatory clarity, what we also need to see is, again, if you want to prevent any regulatory arbitrage, we need to make sure that there will be passporting regimes. So for example, if SFC adopts a see-through RWA regime, so they kind of see through what the underlying asset is, and then therefore they will determine it to be credible or not. So I think what needs to happen is that for IOSCO to come up with a joint framework, so that's related to both SSC and also SC Malaysia. I know that you guys are doing a very big tokenization sandbox right now, and also with like MiCA and also with SEC, obviously that's to the whims of Trump. So I think that will be the future that needs to drive the massive critical mass.
Okay, well, that also kind of move us to the final segments of RWA for the new frontier. Not really a new frontier. This is what I want to point out to Kevin, that you have doing a real world assets of Durance, and you're the sole investors of the largest Duran backed by freehold land and raising the Duran. So why the Duran, and you're talking about something is tangible, and to many, this is very tasty.
So the booth is just right there. We are called Datuk Durian, right? So why invest into durians? Durian.
And why tokenize it now?
Okay, why tokenize durian is because durian is the king of fruits. And what we all do not know is that it is the most profitable and expensive fruit in the world. So you can imagine if you own a durian farm, what is your average return per year? It is 22 to 28% per year, which literally means that your return of investment comes back within 4 to 5 years. And that's not the only thing. A durian tree lasts 100 years, which means that after you are RIP, the durian tree continues to earn for you. So by tokenizing the durian plantation, when we look at tokenization and RWA project, we look for things that is niche, very profitable, very good consistent yields. That's what I look for. And the most important thing is that something that is not already in every market. If there's something that's already in every market, then it's very hard for you to create a giant out into the market, right? So when we look into RWA, we need to look for something that you are guaranteed to have the yields year after year. And by tokenizing the durian farm, you have a physical farm behind it, which guarantees you that no matter how your token price drops, there is a minimum value.
So Kevin, you're also invested in a exchange that is supposed to be doing massive amount of RWA. And what do you see, maybe bringing Justin into the picture as well, how does the actual listing works, and then does stablecoin has anything to do with it?
Okay, so I'm going to simplify this. Literally, RWA exchange is nothing new. Before RWA, it was STO back in 5-6 years ago. But why RWA today is the market has matured. During the ICO days of 2016 and especially 2017, what we were asked to invest in ICO, what are we investing actually? We were told that this is your chance to invest into the next Google, the next Facebook. But is that the fact? We are all investing in utility tokens that you do not have rights to the profits. You do not have rights to the company. Literally, you do not have rights to anything, except that it is a pure utility token. And if they shut down the company, your tokens are worthless. This is the fact today. So, but what ICO have created for the whole entire industry today is very, very important. You have created a global marketplace. So you imagine if you are Australian Stock Exchange, there's no liquidity in Australian Stock Exchange. There's no liquidity in Malaysia Stock Exchange. And even Singapore Stock Exchange is the same. But today, because of the blockchain and cryptocurrency, we have created one very, very important point, a global marketplace. Okay? With this global marketplace, whatever you launch from day one, you are global. You are not regional or jurisdictional anymore. That is the most important point. And moving forward, why I feel that every company will RWA their tokens is because, let's take GameFi. I run a fund that is 200 million US. Today we have AUM about 1.2 billion, depending on price of Bitcoin. So we have looked at GameFi. We have never invested in a single GameFi project. Why? Because every GameFi studio comes out with 5 games, here 5 tokens. That does not work. So what if you do rethink, if the game studio were to issue an RWA token representing stocks in the game studio? That means that how many games that they churn out, you are part of it. And all you need is one success. That's why I felt why I invested in Next Stock, RWA Exchange, is that to facilitate so that companies can easily move into RWA and issue something of tangible value out in the whole market.
That is some sage advice from a seasoned investor. So, all right, Justin's, if the real world assets, actual listings, and how does that link to what you're working on?
Yeah, sure. So I think Kelvin was making a very, very good point, which is one of the benefits of tokenizing is basically accessibility, right, and distribution, right? So essentially, paraphrasing also what he was saying is that, look, like if you're currently in sub-Saharan Africa, or you're in Brazil, or Chile, or Bali, the accessibility to, for example, just US treasuries might not be that easy, right? Or if you wanted to gain access to an Alibaba share in Hong Kong Stock Exchange or on the NASDAQ, it's actually fairly hard to get access to that kind of market, right? So the ability to tokenize it enables this to be global and enables these kind of companies to be able to raise funds from global as opposed to regionally, right, from traditional means. So I think this is something that's really important. One thing for tokenization is distribution. But the other part I think is really interesting is there are also really practical use cases for why being on-chain enables settlement flow to be faster, which enables it then to be cost-saving as well. So if you look at one of the biggest assets today is money market funds. Traditional money market funds are then issued by something like a Franklin Templeton, by a BlackRock. They have now both tokenized their money market funds. One's called Biddle, one's called Benji. And one of the reasons why they've done that is because they want to have cost savings on the back end in terms of how this fund flow works. If you traditionally move from a money market fund into something like a bond fund or something like private credit that Esme has mentioned, this requires like settlement into fiat that a custodian actually has to take. It then goes into your bank account, and then you send it to another administration to actually like subscribe for this kind of fund. Typically, this is like a T+1 on both sides to actually have this settlement. So what that means is that you have 2 days where these funds are actually inactive and actually not generating any sort of return for a traditional investor. When you actually put all of these things on chain and it's tokenized, what you enable this to do is that I can now go from a money market fund into a stablecoin and into a private credit product on one of these marketplaces and be able to move through this atomically in the same day. So what that means is that your money is actually working much more efficiently, and you can make a 2-day return, as opposed to historically this money's laid idle. So I think this is also a really important point where some of the larger funds and a lot of the asset managers are thinking about as well.
Fantastic. Matt, and then Esme?
Yeah, just to kind of share what I'm really excited about and what we're actually working on is if you can imagine tokenizing gold, right? Gold, physical gold, or actually proven reserves that are in the ground that haven't yet been mined. That depends on how proven they are and what documentation you have. But there's 2 different examples, and both of those you can take a tokenized asset. You can bring that into now because of the trust and because of the way the markets have evolved. You can give that to a liquidity provider and then get stable coins. They can underwrite that, and then those stable coins can go be put to work through for the token holders, the retail holders that own that gold-backed stablecoin. They can then go ahead and earn a yield because those tokens are buying bonds, right? Treasury bills. So this is now enabled through all of this, and I think a few years ago this was not happening just because of the way the regulation has been, and now we can see it unlocking a lot of potential and liquidity. So I think that just from an ESG standpoint, I'm really fascinated by tokenizing proven reserves of gold assets that then can be turned into yield-bearing assets for retail users, and actually giving access to more people, not just institutional investors. How can retail make money as well? So through the KYC elements that you obviously enable with the DID, like I said, I think that you can really have a product stack that really enables capital efficiency and accessibility. Yeah.
So I'm going back to Esme, but I'm going to twist the question a little bit. Another one of the biggest RWA is real estate. Everyone's been eyeing for real estate. And with the new regimes here, with stable coins and everything in Hong Kong, Esme, what do you think the window and the possibility of RWA in real estate starting in Hong Kong or elsewhere?
I would say that Hong Kong is a very unique geographic positioning just because it is at the window, if you will, for mainland China. And therefore, we're kind of like on the offshore front. We're kind of in the conduit between the East and the West. And therefore, as a result, we're the beneficiary of a lot of capital flow. So I would say that that's the window of opportunity. At the same time, I do want to mention from a capital markets lens, just tying to my fellow panelists what they mentioned, what's really important, it would be related to distribution. So therefore, when you look at the RWA value chain, I think the most important value capture points will be number one in origination of the asset. So the asset must not be a lemon, because even if you tokenize it with a token wrapper, a lemon is not going to become, something that hits the ball of the park. So that's number one. And then number two would be, what happens would be, the second important point will be around distribution. So if you look at the case study between Coinbase and also between Circle, right? So both are listed companies, and therefore their financials are very transparent. You will notice that right now a lot of investors are actually mentioning to get overweight in Coinbase. And then the reason is twofold. So number one is because yields are coming down, right? And number two is that when it comes to distribution, so the OPEX of Circle, a lot of them actually goes to the pocket of Coinbase. And therefore, what that brings back to real estate would be that I think number one, the most important thing is to, the value capture would be in the distributor. So that would be the broker-dealers. And therefore, the limits test to whether a real estate will actually fly when in its tokenization form would be whether a Type 1 SFC licensed uplift broker will be interested in distributing the real estate. That is, in a way, what is actually happening in the industry. So in my day job, I work in the RWA and also the stablecoin industry. And therefore, as a result, this is kind of the industry channel chat that we're doing right now.
All right. Well, we're going to circle back to where we started. Kevin, you've been investing all kinds of things, including real or virtual. And what will be one real asset that you haven't tokenized or you haven't invested in, you would like to invest and actually take it RWA?
Wow, this is very, very hard. I think RWA just started, right? And there are just too many things that you can actually tokenize. Like the most successful tokenization project in China that you'll never believe it is the phone charger, right? It's the phone charger. That is in China, is one of the best tokenized projects. So there's just too many things that you can tokenize. The most important thing is that does it have a regular revenue stream that we can tap upon? Right? I'm still looking. I'm looking at dozens of RWA projects, including real estate, although I do not believe that Hong Kong real estate can be tokenized because simply Hong Kong real estate is too expensive. Right? If you look at reality today in the market, which real estate is really being tokenized and the retail market is buying in, right? It's the 300,000 US to 500,000 real estate that people, because in the retail world, people wants to see that, hey, within 30 to 45, 60 days, sold, everything completed. But in Hong Kong, you're talking about a $60 million kind of thing. How are you going to complete this in the retail tokenized market? There's no way. Maybe 5% of it you can do, but Hong Kong real estate tycoon are not interested in tokenizing 5%. Let's sell half of my building away at minimum, right? So RWA market has just started. We need to face reality on how. I have a Dubai tycoon comes to me with a 15 million US villa. Let's tokenize this villa, Kelvin. I want 25 million of your money. I'm like, are you joking? How are you going to sell $15 million villa out? You can't even find a renter guy. That guy must be like a sheikh best friend to rent your villa. And that guy probably buy one himself.
All right, so we got the different answer and different view on the real estate. Let's hear some closing statements. Again, this is about trust. We started talking about regulation, how it can be the foundation of trust, and we talk about the IP is the next, and some of the things we have tried and experimented with NFT. Now we also look at the future. Is something there is so much to be tokenized in the future. So let's hear some closing statements.
Trust is actually the basis of tokenization. Regardless whether it's RWA or even utility token, the trust is the most basic factor that arise. Like a stable coin, you must have the trust in order for you to buy their stable coin and to support the stable coin. We invest in stable coins as well. Companies we have been looking at, thanks to Genius X, now we get like 10 proposals of stable coins that we can look at to invest in. So trust is the most important factor. When we ask ourselves one question, how do we establish the main trust? I'll talk about RWA and not utility token, is that if you ask yourself, hey, you ask back the project owner, what if your company goes bankrupt? What will happen to my invested money? If the project can answer you that question, if my company goes bankrupt or touch wood, the founder get knocked down or the plane crash, what's going to happen? If he can answer you this question and he can still protect your investment, that is probably a good RWA project.
Yeah, I think trust for stablecoins, obviously, as Kevin mentioned, is the most important. Everyone always talks about it being one-to-one backed on the back end, but having regulation actually, safeguards all of those assets and holds us to a standard where we have to be liquid, and in fact, more liquid than a bank. If you think about a traditional bank, out of $100, $87 is taken out for loans and $13 is held liquid. For actual stablecoin, it's close to 100% you can take out today and we can liquidate it and maybe even destroy a bank, right? So from that perspective, it's something that's really important. I think for Hong Kong market specifically, if you think about like what Esme says as a historical market for Hong Kong, it's really two major things which are very, very well positioned to be tokenized. One thing is that it's a cross-border payments market. Hong Kong in 2024 cleared around $1.2 trillion US dollars, $1.2 trillion US dollars worth of B2B payment flow. We already see this all moving on chain. Why? Because Chinese exporters always clear their capital in Hong Kong before it goes back into China. This is going into emerging markets like Africa, going into Southeast Asia, going into Brazil. And we obviously see SWIFT failing in some of these areas. I was in Nigeria last week. A US dollar transfer from Nigeria back to Hong Kong takes about 14 days. Right? And so if we can do this through stable coins, this is something which is hugely beneficial, where you can do it in 5 minutes. Right? But this is required where you have law, you have licensing, so that Chinese corporates who are moving trillions of dollars can actually trust something that is actually regulated by the government to receive it back into Hong Kong. And this is similar for the asset management market in Hong Kong. The capital market is huge. In Hong Kong, asset managers are still growing at 10 to 15% a year. They need things which are regulated so that banks can accept it, so that users, private wealth, asset managers can use it. So these are kind of more practical use cases for why trust is important from a regulation perspective, but also from an operator perspective as well.
Great. Matt?
I'll make it quick. How much do you trust AI? So I think that trust is a big one for us right now, and blockchain can help with that. I think that decentralized AI, you're going to start to hear more and more about, just because compute that is being fed into these centralized models, how much do we trust them with our data? So I think the more and more that we can decentralize the compute that we're using to train models will really help us trust more. But also, how much do we trust what we're seeing in the world, in the content world now? Right? I think that having decentralized identities and identifiers, social graphs, all of this, proof of humanness, this is all going to be very, very important, and blockchain and digital identities are all going to be a part of that. So trust is definitely a very important thing, and yeah, look out for it. I think AI is definitely going to be the main driver for our lack of trust.
Esme, you have the last word.
Yeah, three keywords, and I'll keep it very short. Three keywords would be number one, liquidity. Second would be tighter spreads. And then the third thing would be around distribution or ecosystem. I left out regulations on purpose because I see that we've already talked about profusely, and I don't want to end this panel on a boring note anyways. So the reason for tighter spreads and liquidity is that right now, what transforms a RWA from a collectible to an investable asset is that we need a secondary market, which is liquidity, which is what is lacking right now. Because if you see on the technology standards, so we're already way up there. any maybe like a 15-year-old punk can already program in his garage to tokenize an asset, right? But what makes a difference between that being investable would be what my fellow panelists talked about, and that will be having regulations and also standards, and that would lead to tighter spreads. When spreads are tighter, that means institutional capital is going to come in. So for example, Kevin is going to start investing when spreads are tighter, right? So that will lead to the entire ecosystem, and when the ecosystem takes place, so the flywheel will then happen, and that leads to all of us being very happy people.
Well, let's put our hands up together for our wonderful panelists and their insights. So thank you so much. And with that, let's take a group photo together.
There we go. Thank you very much, Joe Pan. Great job with this panel. Way to go. Ladies and gentlemen, another big round of applause for our panel. Woo!